Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, I hope everybody had a great Thanksgiving. I know I did. And, well, we're back at work. Well, such is life. Um, I have a interesting thing I kind of was reported today. It looks as if there's some supply chain problems with Apple. And the question is, is it a potential short? And I definitely think that might be. And what I've tried to do here is kind of put up something that might address that, so we can take a look at it, and see if if it works as a short. Now, I have been shorting some items. I did have a short on Tesla. I closed it. I didn't want to, but it kind of went against me a little bit there, and I sort of had to close. So not the greatest thing. By the way, if you are knowledgeable in terms of what a short is, let me just kind of run it down for you because it's very for a lot of people it's sort of mysterious, but it really isn't. I mean, it's really kind of a simple concept, and basically what it is you need a level 3 account at your broker. Now, I happen to use TD Ameritrade and Charles Schwab primarily, but there are some other ones out there as well, interactive brokers. There's a lot of good brokers out there. And what you do is you have a level 3 account, and with the level 3 account, that allows you to potentially short a stock. And what you do to short a stock is you borrow the stock from the broker and then sell it immediately, and then that restricted cash is put into an account. If the stock goes down, then you're going to cover it basically by buying back the shares and giving them back to the broker and kind of coming out at the beginning. And the difference is the mark to market, and that's where your profit potentially is going to be. Now, of course, if the stock goes up and it goes up, I typically say more than 5%, it's probably a good idea to cover. That's where you're going to lose money on that. But it can be in a kind of a weird market like we're in. We're in a confirmed uptrend, but there's a lot of stocks that are going down, and there's probably going to be some more pain, out there. We just don't know what's going to happen. But it does look as if potentially, potentially, Apple is setting up for a short. So let me push this over for everyone here. Let's see if I can do that. Let's see, I'm going to flip that camera and kind of see. Yeah, there we go. That's not the greatest, but hey, we have to deal with what we've got with with TikTok. I'm going to try to walk you through this a little bit and see if you might be interested. Who knows? We'll see. But this is basically a chart of Apple here, and basically what's going on here is that as you can see, there's sort of a downward trend. There's sort of a downward trend on Apple. So it's moving lower. So basically, what's happening here, of course, is that it did pull back today. Now it's rallying in the after hours. You can see that by this 144.39 up there. It did move up a little bit. So stocks don't go down directly and they don't go up directly. They kind of zigzag, and it's pulled down. And so I do think that we're going to get a rally in Apple stock. Now, I'm looking possibly to short this if Apple achieves over a 147.26 level. Now, why 147.26? Well, the reason why is that is the 21-day exponential moving average, as you can see down here. That's the number, and that's important. Right now, the price of Apple is 2% below that, but if it rallies up to that, that's probably a very good place to short it. Why? Because that is the level of resistance. And one of the things about Apple, of course, is because it is extremely widely held. It's an extremely widely held stock, out there, of course, and it's just so it definitely gives us an opportunity to borrow it easily, and that's what you got to have. Essentially, oh, it's not liking that. I don't know why it isn't. that's what. Oops, that's what it's not. It's no, come on. There we go. For some reason, I'm not picking up on the on the on the Apple. So on the camera. So let's flip it. I'm definitely on Facebook, but I mean on TikTok, but I'm having trouble with again with my camera, and I don't know what this is. This is a software issue that I've been trying to resolve here. But anyways, let's take a look at Apple um, directly here, and I'm going to flip the camera over here and take a look here. So hopefully I'm doing these controls right. Let's pull it over to here. There we go. And no, come on, come on. See if I can get my ugly mug back. Okay, it's just absolutely not being cooperative here. But hopefully I can get that back. So hopefully that will give me the ability. And then, well, I guess you can see my avatar. So that's probably the best I'm going to get here with this. So, anyways, basically, this is the chart of Apple, and as you can see, Apple has sort of been moving. Um, Apple Apple has been Apple has been moving lower. Come on, baby. There we go. Okay. So as you can see, Apple has been moving in this downward trend, and currently, Apple is below the 200-day line and also the 50-day line and the 21-day line, and it basically has fallen and it's below all of the indexes. And you can see there's some volume coming in, there's some selling coming in to this. This is the reason why I'm considering uh, I'm considering doing a short here because of this volume coming in as well as the stock coming down now. So basically, what I want to see here is the stock rally to about 147 or so. It's 144 currently, and then if it does achieve that level, it does look like it's moving up after hours. That's probably where I will initiate. I will initiate the short there. So hopefully that will work there. Now, there we go. I'm back again. All right. So I was gone there for a little bit on that. All right. Well, so let's kind of take a look also at another stock that possibly go long on. And just wanted to show you these two examples before we get into the questions. So thanks for being so patient. This is Charles Schwab, and I do believe that this one is moving higher. So where I'm looking to possibly to buy this is if it is able to move, if it is able to bounce here at about the 21-day line, which is currently about 78. So I want this to come down to about the 28-day line. That's where I'm possibly looking for an entry into Charles Schwab at 78. 98. So that kind of gives you kind of the long and the short of it. Basically, want to show you, what I have had here today in the market. Not very good. I'm holding basically only one stock currently, and that is BP, and it was down today. It's kind of holding its own, but it's still, again, with the price of crude going down, it has not been as good. That's the only hawk I'm holding. I'm closed on all my shorts, and then I'm in cash. So I'm waiting for a potential entry point. So that's why I'm looking at those two. But right now, again, I'm still very, very defensive in this market. So it's it's a tough market to trade in general. All right, well, let's go to some of the questions. Thank you so much for holding on here. Let's see if I can move that over. Yeah, great. And hopefully everyone had a great Charles. Thank you very much. Big diversion, and this is what Charles is saying. Big divergence between oil prices and the producers and refiners. Will they get back in line and win? Boy, that's a that's a fantastic question. There's a lot of manipulation going on, obviously, um, with oil prices. What I'm looking at isn't as right now to be very defensive. I'm looking at more of either the large integrated oil companies or or the refiners. This is I'm not as I'm not as bullish right now on some of the E&P companies, though they've been great in the past. I'm not as bullish on them. Why? Because there is a fair amount of of supply coming to the market. So we got to be careful in that. We kind of got to look at companies. I believe in the refining space. I think that's where we're going to see the best things. I know I still like it. Of course, I'm in BP. I'm looking at Dino. Let's take a look quickly at Dino, just really really quick, to see if there's anything there that we can kind of take a gander at. So let's look it over there and let's look at Dino. Dino DINO is HF Sinclair, and they are primarily a refiner, and that's why I kind of like them. We're still seeing a we're still seeing a shortage in diesel fuel, and that seems to be like a not just a U.S. problem. It seems to be a problem all over right now. Seeing that shortage in diesel fuel. Now, one of the things I like about Dyno, I think you can buy it on the 21-day line. You can see that we're it's kind of moving up this it's kind of moving up this green line right here, and it's sort of bouncing on it, and it did pull back to that. So this is not necessary. Now it's it probably is a little extended, okay, because it basically the buy point 58.30, and currently it's at 63. So that's probably a little bit extended here, but I still think this is a very, very good stock. It's in the right area, I believe. And if it pulls back I think about to it's a little bit below the 10-day line. If it pulls back to the 21-day line, that's really where I would try to enter this. Now, I'd enter this long and not short because I do think that, we're coming into winter. There's a shortage of diesel right now. There's not a lot of refiners. It doesn't matter what the price is. It matters what the throughput is from some of the refiners. And it does look like HF Sinclair, some of these smaller refiners are doing pretty well. So I like it at about 21. Now I'm not in the stock currently, but I'm looking at it as a possible, as a possible entry point there, at right at about the 21-day line or about 60 to 83. So we're real close to that 63.34, and I do think it's pulled back down to that. And if we get a pullback tomorrow, which I think we might get, and that's probably where to buy it when it reverses. But I definitely think it's going to hold at or just about at the 21-day line. This is HF Sinclair, and the symbol on that one, of course, is Dino. Dino. So thank you very, very much. The big divergence, I think, is between the producers and refiners because I think the bottleneck is not in the price of oil. I think there's enough supply coming in now. From the problem is in the mixture in the refiners, and that is why I prefer the refiners right now on the large integrated oil companies, because it's just amazing. I think they just shut down some more refineries in California. It's just they just they want gasoline to be absolutely unaffordable. I don't know what they're thinking, but it's getting more scarce there. And of course, everything travels on trucks or trains, at least to ground, at least on and or ships, at least in ground. And this is making supply chains very difficult. Diesel is in shortage still, and I think it's going to remain that way, unfortunately, for a while. So that's the reason for the divergence. I think we're going to see. I think we're going to see eventually it come into it. It come. I think by the end of by the first quarter of this next year, I think we're likely to see it come closer into there's be a balance there, but there's going to be a tremendous demand destruction. People just aren't going to heat their homes. I mean, they don't have the money. I mean, they don't have the money. So, whereas gasoline may be relatively affordable, the problem isn't really with gasoline; it's with diesel and heating oil. And those are the problems right now. I mean, you're seeing 40, 50, 40 to 50% higher prices this year for heating oil in the Northeast. So that's a killer, and that's gonna make it very difficult. So there's going to be a lot of demand destruction. I do foresee we're going to see lighter holiday spending. I know that's probably not uh, exciting for a lot of people. But I do think we're going to see a lot demand, demand destruction. But I do think it's going to come back into balance probably in the first quarter, and that is the key. The key is how much diesel can they produce right now? They're short. That's causing a lot of supply chain inflation, and it's just tough. So, but I think the first quarter is going to be when it gets back into production. If that's why I think right now the buy, if you're looking to be in the oil sector, and currently I only have one integrated company, and that's BP, is in some of the refiners. So Exxon Mobil, the normal cast of characters are there. I happen to like BP because it's relative. When I bought it, it was in a relatively good position. It hasn't done really all that well though. So, but let's take a quick look at BP just for fun and see kind of what I'm looking at here. So BP, and of course, BP is a very large international, very large international oil company that has lots of refining capacities, and that's one of the reasons I like it is because of the refining. But here you go. Currently, we did, it pulled back today and it pulled back a little bit after hours, but as you can see, where I bought it was right in the buy zone, and then we rode it up, and now, of course, it's pulling back to the 10-day line. But the general progress is, it's slow but steady, but it is moving higher. And this is BP. So right now, would I buy it here? Well, we're just at the top of the buy zone. I would try to get it if we're interested in buying this at this point. And I'm not buying it right now. I'd like to get it a little bit closer to that 21-day line, but we're within 3%. So anything within 5% of the 21-day line, I definitely like as an entry point for something like BP. All right. Well, thanks for going big kind of story there. Okay. Oh, hey, BTU, is it breaking out? Very good question. BTU, of course, is uh, BTU is Peabody Coal, and British. It's also British Thermal Unit for not that that's important, but their symbol on the exchange, of course, is BTU. It's the world's largest coal company, just coal, pretty much coal only. And are they breaking out? Well, I don't know if I'd call this a breakout. The buy point on Peabody, on BTU, it's about 33.28. I think we could see that. Let's see if we can show that on the. Did I'm showing it on the chart? I'm kind of move it over there. Okay, great. So you can see it on the chart here. 33.29 is the buy point, but it's not. Here's what I don't like about this chart. This is not a. I like a deeper base. You see, this has just been really a consolidation between basically there and there. So it's really in a consolidation mode. It's pulled back to the 10-day line. I don't think this is really breaking out. I wish I could say that it was breaking out, but I just don't see this as breaking out right now. I just see it in this kind of range. I think that there's resistance at basically the even levels like 30 and possibly up to 33. But see, it's just really kind of in this consolidation. So would I buy it here? Well, I like several things about this. I really like the fact that it's got this incredible relative strength, but I don't think it's a good buy right now. So I just don't think. I think it's going to kind of just continue on in sort of that kind of that pattern. So that's kind of what that's kind of what I'm seeing there. So not I couldn't really recommend it. It's a good stock. I mean, if you want to have exposure to coal, it's BTU is the way to go. But I just think that right now it just is in this consolidation, and I think with coal we're going to have to go through some more pain because we're going to have some demand destruction in some of the biggest coal markets. Of course, that's in China. That mostly supplied from Australia, but still there's a world price for coal. So I think really what you got to do here. I don't think BTU right now. I mean, at least not today. I don't think it's necessarily the way to go. All right, Mark. What about Tesla and Amazon? Well, I kind of belatedly closed my short on Tesla, so let's look at that first. Um, and then of course after hours news, in my Discord group, thank you very much, by the way, for bringing that up. They reported in the Discord group, hey, there's this thing happening. So there's looks like there's a dead cat bounce on Tesla. I do think it's going to reverse at about 185 here. As you can see, it's been making its way down. This is sort of how it works. It'll on a short, it'll come down, it'll dead cat. Isn't I love that term, dead cat bounce up there a little bit, and then it'll come down again, and then now it's kind of coming back up. Now, I do think that we're going to see some resistance at the 21-day line. This is kind of where, unfortunately, my timing was incorrect on my short. I shorted it too low. I shorted it at 175. I wrote it up to about 185, 182, and of course, the way I work it is that I have automatic stops that come in and basically stop me out. So I was stopped out at about 182 on that, which is unfortunate. I wish I could have ridden up higher, but I just have to. I over the years, and I've been very careful about conserving my capital, and that's one of the things. If it moves up more than about 5% on a short, I'm typically out. Also, on a long, it takes me 8% down to cover, but on the short, I like to cover it quicker at 5%. And the reason I do is, of course, is because the interesting thing about shorts is that they typically move faster on the way on when they rebound, and they rebound typically because of short covering by larger institutions. So that's something you got to look out for. But on Tesla, I think there may be an opportunity to short it at the 21-day line. Now, where is that 21-day line? Well, that's at 193. So what you want to do, if you can, if you're looking to short this, is wait until it bounces up to resistance. Now you can see it's right straddling the 10-day line here, but if it moves up to the 21-day line, that's where you can possibly take a whack at it. If you take a look here down here with the volume bars, we're definitely up on the volume. That's a dead cat bounce. And so whenever something is bad news, it initially comes in bad and then it turns around. Why? Because there's short covering typically. So that's the danger in shorting. But this one might be where we can do something on that. So let's take a look at, okay, so we want to look at Amazon and see if, if we can do something with Amazon. So let's look at Amazon, AMZN. Of course, they had Amazon announced a very large. I think the polite way to say it would be a staff reduction. They're gonna fire 10,000 people. This is amazing, considering that last year they were hiring basically everyone and their mother. But this year the demand is lower. Even Jeff Bezos himself is saying, hey, maybe it's not the time to go shopping for a big screen. I don't know why he's saying that, but I would think he would be saying, please buy the big screens because we got to get them out of our inventory. But I think that, if you look at the chart, again, the technicals tell the story. And of course, what I'm talking about when I'm talking about technicals on a stock is I'm looking at the chart action. I'm not looking at the underlying fundamentals of the company, because I still think the underlying fundamentals of Amazon are spectacular, but not in the short term. The short term, of course, as they say, as John Maynard Keynes said, in the long term, we're all dead. So remember that. So that's why we want to be short term trading. At least that's the way I think. I like to think that short term trading. Now, if we look at the chart on Amazon, you can see a trend. Our trend is unfortunately lower. Basically just back here in August, we were all the way up here at 138. This is after the split. Now we're at 94. That's a lot of destruction in terms of price. It's a lot of destruction in terms of price. So even though we have rallied here, again, this is kind of, if you're looking to short this might not be a bad place to short it as it comes up to the 21-day exponential line. And currently, That's at 97.45 right here. So that's where the 21-day exponential line is at, and that might be a place to short it. As you can see in this chart, it comes down, it hits the floor. The floor is about 85. It bounces typically up to the 21-day line, down again, gets resistance, and then will come up to the 21-day line. If it hits the 21-day or slightly above it, and of course that's right at about 98 there or so, 99, that might be a place that you're going to see a nice place to short it, because it's like a slinky going down the stairs. It comes down, it comes up, comes down, it comes up, and I think the resistance, the ceiling on the stock currently is about 99. So that's where I would short it. We're at 94, so not ready to short it yet. Just wait maybe a little bit until it comes up to that 21-day exponential line. So that might give you an opportunity there to short, which I think and I tell you, at least in the last at least in the last few at least in the last few weeks before I went on vacation, I've been making most of my money shorting the stocks and not holding them very long, basically waiting for them to come up to resistance, shorting it, letting it move down basically, and then taking the money out each day. So not normally a day trader, but this is the kind of market that you kind of gotta look at your day trading chops. All right. Thank you very much, Charles. Appreciate it. Any reason you would not buy a put instead of selling short? A lot less risk. Well, that's true. That's true. But I like to. The reason I like to short stocks and without using puts is that I can size my position, and that to me is very very important. And the reason is because remember, a put represents 100 shares. Well, 100 shares of Tesla is quite a bit of money. So I would sometimes rather be able to adjust my position size. And what I do typically is that I will typically never short any more than I will never short any more than one full position. And what is a position? Well, that's 1/8 of the value of your trading account. So let's say I have an $8,000 trading account. It's a little more than that. It's a little more than that. I typically will not short any more than a half or full position. So in that case, I would sell $1,000 worth of shares if I had an $8,000 value in the portfolio. Therefore, therefore limiting my liability on the upside. And typically, you want to cover your short at about 5%. So if it goes up to about 5%, you want to close your short. But if you're day trading it, and I sort of am forced to do that, that's one of the reasons I do it. And also, I don't have to worry about expiration dates um, using shorts. Now you can use put spreads, which I do like very much as well. I typically will use a put spread when the puts are well priced to the underlying instruments. But in some of these things like Tesla, they just aren't. So I typically like to short the shares themselves. So I get a little bit of an edge there. So, but it's a very good question. So thank you very much for that. All right. All right, let's look at the UPRO. By the way, for those out there that don't know what the UPRO is, the UPRO is a ETF, exchange traded fund, that that moves in sympathy with the S&P 500. Now it's a 2x fund, and it has been trading. It has been trading up a little bit. So let's put that up there on the chart. And what's happened is we've come up here, and again, this is why I like to when I'm doing this, I like to trade off of these lines. This pink line here that we're seeing, showing you right there, that is the 10-day exponential. So that's the average, the 10-day average. So you take 10 days, you average them all together, it's going to give you that line there. Now, what happened? Well, we were trading above that line, and now we've fallen below that line. So the question is, and it does look like in the after hours trading, it is up a little bit. So it does look like we're going to get some support at the 21-day line. Now the question is, where is that 21-day line? Well, currently that 21-day line is at 35.90. 35. Excuse that right? Yeah, 35.69. Excuse me. So that's where that is. That's where I think we're going to get see some support. But in all, would I buy this? No, I'm not really. I'm not really that. Right now, right now. I don't want to buy the U Pro, and the reason I don't want to buy the U Pro is the U Pro is the ideal thing to buy when the market condition changes. It moves from a uptrend under pressure to a confirmed uptrend. Now, currently, we're in a confirmed uptrend. So typically, I want to buy the U Pro on the day of the change from a from a from a uptrend under pressure to a confirmed uptrend. I don't want to buy it, and I want to buy it on the first or second day after that. We've been in a confirmed uptrend for a little bit over a week, a little bit over a week and a half. So I probably would not be a buyer of the UPRO at this time. I would wait for a change in the market condition in order to do that. So very good question. Thank you so much for that. Let's see. Okay, let's see. Take a question from TikTok. Thank you for. Oh, PBR. Okay, this, by the way, everybody, is not Pabst Blue Ribbon. This is Petrobras, and it's a Brazilian state oil company. And because we had an election down there in Brazil, and it looks like Lula, who is the socialist slash communist candidate, he won. And it does appear this is a favorite. Anytime a leftist wins in one of these Latin American countries, typically they will go and they will loot the the state oil company. This is a standard across across many countries. They do it in Mexico, and I'm afraid they may be doing it here in Brazil. Just the fear of this made it move down. Now I was holding a position. I wrote it up basically from the buy point here at 10. I wrote it up from the buy point here at 10, and then I did sell out. I think it's noted here. Yeah, 8-1, bought one full position at 1404, and then I wrote it up basically, and I sold it out. Right, basically, at about 15 or so. Not a whole lot of gain there. As you can see, just the fear of having a socialist win the election made the stock did made the stock retreat all the way up from about 1460 all the way down to 10. So that just shows you how driven by news events this stock is. So currently, would I buy it? Well, it's just barely getting off the 200-day line. Would I buy it here? Probably not. Even though it does have an upward trending relative strength line. But here's the problem. It has what they call overhead supply. I know I'm giving you all these weird terms, but it has a lot of overhead supply. And what overhead supply is that all these people that bought it up here, you see now they're going to start unloading it. So it's gonna force it down, and it's going to keep the stock down. So I would not recommend PBR at this level based on the chart action. Based on the chart action, I wouldn't do that. So I would say thumbs down on PBR, even though I do like the company and I have owned it before. So, but thumbs down on that, unfortunately. All right, Jim, thank you. Thank you very much. You're very nice. You're very nice to say that. I appreciate that, Mark. Well, anytime you have a hobby that you enjoy, you you read a lot about it. So I've been doing it for years, and I think it's really kind of fun to look at the stock market, especially technical analysis. I think it's a really great. If you're into investing, this is something that you need in your back. I think you really need in your toolbox. And you know what? It's so easy to get that because there is a book. I can always recommend this book called "How to Make Money in Stocks: A Winning System, Good Times or Bad," written by William O'Neill. And I really strongly believe that this is a great book. I think everyone should take a look at it. It's an easy read, and you can get it at used bookstores, and it shows you the Kanzler method. And I think it's just really interesting, and it's paid me very very big dividends. So in the past, so thank you for that. I so appreciate it. Lisa is asking about SMCI. And she says it's strong. Well, I don't know. Let's take a look. SMCI. And take a look there. Supermicro, you are right. Absolutely. This is a very strong stock. This company makes server blades, that go into server farms. And so cloud computing really is, this is benefiting from the cloud, continuing to benefit from the cloud computing revolution. So I agree with you, Lisa. This is a very strong stock. Look at that, 99 relative strength. That means currently this is in the top 1% of all the stocks. Now, of course, we're in a relatively weak market, so top 1% is not what it used to be. I mean, in a much stronger market, top 1% really was exciting. Now it's good, but it's not necessarily the best. Now, would I buy it at this level? Now, I would potentially add to the stock, but I wouldn't buy it anew. And the reason I wouldn't is because it's extended. What do I mean by that? Well, if you look at this, 74.93 is the buy point. And the way stocks typically work when they're moving up, they kind of go up in steps, as you can see. This is going to step here and then stepped up and then stepped up. So one, two, three. Well, here's the thing about that. They come through a base, and then when they go past the former higher high, that's where you want to buy it. Now, I know this is counterintuitive to most people because they tell you in school, buy low, sell high, right? Well, you don't want to do that. You want to buy high and sell higher. So you want to buy a stock typically as it's making its highs, and that's interesting. And this one, of course, is very strong stock. It's moved out right up that 10-day line very, very nicely, and it may continue doing so. But to buy it here, you're going to risk a lot of potential damage. Now, here's what can happen if you were to buy it extended like this. If the stock stops its move, it can probably collapse, and it probably can collapse right down to the buy point. So that's one of the reasons you don't want to buy extended. You only buy within about 5% of that buy point. So I could not recommend buying this right now. It's a strong stock, and sometimes you have to let the buses go by, and it's tough. But if you look at this on the moving averages, it's 12.9 to 8% above the 21-day line. Typically, the primary buy point is the buy point, which I was talking about, but the secondary buy point I like is the 21-day line. So it fails, unfortunately, on both, but it's an excellent stock. If you're in it, definitely want to stay in it. No question about it. But this is not a new buy stock. Really is not a new buy stock right now. It just doesn't work on that basis, unfortunately. All right, Charles, thank you very much. What do you expect the Russian oil sanctions will do to the market? As a whole with oil and natural gas. Well, of course, the issue with and this is just total speculation on my part because I have no inside knowledge. But one thing I do know is that we are going to see the Russians have to sell oil. Why? Because they have to fund their war effort. So so here's the thing to think about with the oil. This is one of the reasons that we are seeing a little bit of a price drop in oil coming down to about, I think it's going to stabilize at about $65 a barrel. Why? Because the Russians are having to sell of it. And of course, they're selling to India at a 30% discount. They're selling to um, China at a 30% discount. So the real price is actually lower than the West Texas Intermediate price. So the Russians are going to have to sell a lot of oil because they've got a lot of they got a lot of expenses in their war. So I do expect that you know I don't think any Russian oil sanctions are going to do anything because there's enough demand in the third world, especially in China and in India, I'm afraid, and they're going to be buying oil there, of course. And so I don't think, unfortunately, it's not doing anything. Again, again, we're what we really should be doing here, and of course we're not, is we really should be amping up our domestic production, freezing them out of the market, and and controlling the shipping. But we're not doing that, so it's kind of not the greatest thing. Any thoughts on the rail strike? Which company will benefit? Oh, absolutely. This is a fun one. As you know, there are several major rail companies. Believe it or not, it's hard to believe that rail would be, but rail is the most efficient land shipping method. So, by the way, this is where the price of diesel is an issue because even though a locomotive is about over 100 times as efficient as a truck, in terms of moving volumes of freight. And of course, but of course they're slower and they've got a lot of technological ones, and it's easier to strike it's easier to strike a rail line than it is to strike a trucking company, obviously. But here's the thing: Warren Buffett owns BNSF. It's a wholly owned subsidiary um, of um, of Berkshire Hathaway. I don't expect a whole. I suspect they're going to have a pretty. I think they're going to do pretty well because they're basically hauling coal. So, and they're hauling that out of the Powder Basin in Wyoming. So, BNSF is probably going to benefit somewhat, even on a strike, because regular freight won't go. But the companies like Norfolk Southern and BNSF that have high amounts of coal are probably going to do well. Those can be run. You can run a 4-mile coal train with about a crew of 2. So you can get scabs to come in and and break the strike. I don't think it's going to have a huge. Well, I could be wrong about that, but I don't think. I think the potential is overstated for rail and the rail strike. So, but I'm not a buyer of rail stocks right now. I'm just not a buyer of them right now. I just don't think that that's a tough area of the market. All right. Well, let's take the last. It's like the last 2 questions. This is from TBT or any of the tech contrary funds now, and the market probably will crash. I don't know. This is a really tough one. Um, I just can't say. I think that you got to stay out of the semiconductors right now. I think there's so many issues there that it's real. This is a really good question. I don't really have a good answer for you on the TBT, but the TBT for everyone that's out there is the contrary bond fund. So as the as and this is kind of strange, but as we know from our economic class, as the interest rates go up, the value of bonds go down. But there's a contrary one, and this is the TBT, and it has been trending higher with the higher bond rates. But the question is, will that continue? Well, there we go. Okay, so no, it is not. So this is the question on what the Fed does and everything. So it made this nice ascent as we were considering higher interest rates. And again, of course, because the stock market's a forward-looking indicator, that was until about the second week of October, and then of course that was all baked in. And then when higher rates didn't materialize, we did have higher rates, but not as high as they expected. It pulled back. The question is, will it turn around? I I think that I think the TBT could go down to as low as as the 200-day line, but I don't think it's going to crash. I really don't, because I just think that yeah, we got a lot we got a lot of issues with with the funds and that. All right, everybody, thank you so very very much. By the way, I haven't put it up on um, the webs. I'm going to put it up on the website, but I have a heat map, and I'm going to try to get it up on the website www Dallas Trading Floor right after the show here. And I think it's definitely worth taking a look at. It's right now. There's not a lot of leadership in the market. It's a tough market to trade. I'll be honest with you. So here's my advice: I wouldn't be any more than 50% exposed to this berry market. I don't think it's. I think it's moving potentially lower, and I just think you got to be careful. And it just got to be careful. I pulled my exposure back myself. I'm basically only in BP. I'm looking to short, but I'm looking to short at the right level. I'm considering shorting Apple if we get a nice price raise. And I do think that there's just a lot of people that are going to have to sell Apple stock. I don't know if you know this, but because of the COVID lockdowns in China, we have seen a situation with Apple that and the demand for the iPhone 14 just isn't there. So I definitely think that, but it's the most widely held of the tech stocks. You don't want to be long any of the big tech stocks right now. You don't want to be long Microsoft, Apple, any of these big tech stocks. You don't want to be in. The funds are overloaded with them. They're going to try to unload them, And but I think we can make money on the downside on them. That's what I'm looking to do. I'm looking to short the big tech stocks, Microsoft, Apple, and possibly Amazon. So those are the ones that I'm looking at potentially moving lower. All right. Well, thank you very much, everybody. By the way, if you're not already a member of Dallas Trading Floor, it's really easy to do. All you have to do is go to www.dallastradingfloor.com and sign up. It's a good place to do it. Um, and we also need your help. And let's see. Okay, let's. Oh, hey, super sticker. Wow. Yes. Thank you, man. Thank you. Thank you. Thank you. Thank you. Thank you. So appreciate it. By the way, if you're watching on TikTok, we have a great thing on. We have a lot of people out there, and I want to try to give them the best information I can. So please help me help me keep this channel on the air. I'm sort of a one man band, but I really appreciate all your comments, and I really love doing this. So thank you so very very much. By the way, if you're not a member, just go to www. Dallas Trading Floor. Also, and this helps us get out to a lot more people out there. If you could go and I know that you hit the like button. I so appreciate that. Also, if you could, yeah, if you're on the YouTube channel, if you could subscribe, that would really help. So hit that like button, but also hit the big like button. There we go. That's hitting that big like button. So hit it like, and we will be back tomorrow at 5 o'clock. So appreciate everybody and thanks. And I'm glad everyone's back from Thanksgiving. I'm going to try to give some insight into the end of the year. Hopefully, we're going to get some good profit making opportunities. That's the key, profit making, and either shorts or longs, but some good profit making into the end of the year. Well, thank you everybody, and I will see you tomorrow at 5 o'clock. Thank you very much and happy trading.